Sir, whatever I'm saying, FIMM very important, sir. Every interview you will have 99% this question, sir. Whatever I'm taking today, next 2 hours or 3 hours, every interview you will have this question. At least you can manage 5 minutes in your interview session, sir. Out of 30 minutes, you can make 5 minutes of time this one. If you have proper knowledge on this one, you will achieve your 5 minutes of your time in your interview. Remaining 25 minutes only your next target. Okay, if you be in upper hand for 30 minutes, then you will clear your interview. So out of which 5 minutes is going to be your FIMM integration will be there. Every interview you will have it, sir. Okay. So ఇంతవరకు ఏమన్నా డౌట్ ఉందా సార్? క్లియరా? Okay. Next, this is we are discussing in general point of view. Let's take in business point of view. When you are executing a business, are you able to get your goods receipt and your invoice receipt at a time? Is it possible? Let's take any MNC. So SAP mostly small scale entries like 1 crore, 2 crore, 10 crore businesses, very rare are using of SAP. Let's think about globally like 10,000 crores company or 1 lakh crores company. That is the level of thinking you need to focus from now onwards. If you are working in an organization as a SAP FICO consultant, you are going to see huge figures, sir. It's not like 1,000, 10,000, 2,000 or 1 lakh, 5 lakh, 10 lakh, 1 million, 1 crore. No, sir. You are going to see thousands of crores in transactions. So you think in such a level. So in such cases, if you are selling a product or if you are purchasing a product, is it possible to happen both the things at a time? Let's take my organization in India. Let's take simple example of this guy, Elon Musk. Okay, he is doing his cars manufacturing. He is doing his cars manufacturing in China. But the transaction is happening in US, Japan, whatever the other countries. Right now it is not in India, but other countries. So based on his order, vendor or purchaser, he will go and give his quotation. He will get quotation and he will give order, purchase order. So immediately the respective car will get delivered. So at the time of invoicing itself, is it got delivered? Or at the time of payment, is it got delivered? So everything we need to follow in system. So initially they will raise a purchase order. They will take some advance. So you are going to have your advance value against your purchases. So we have seen FY 28 or 29 somewhere. Vendor advance postings, sir. F 29, 49, 48. Okay. So where you do your advanced transactions. While doing this advanced transaction, you will give your PO number. You will have option of giving PO number. That means you are giving an advances against the respective purchase order. Okay. Then later you will get delivered your goods. Once delivered the goods, then they will give goods receipt. Then post goods receipt, they will give invoice receipt. Okay. Here the goods is going to be in transit. It might be through freight, or it might be through ship, or it might be road, or whatever it is. Freight means through flight. It might be any transition mode. Finally, it will get delivered to the respective destiny. Okay. So once it is delivered, immediately will say, I got received the goods. Then what vendor will do? He will send invoice. Sending invoice nowadays, mostly it is 1 minute job. You can send it through online, WhatsApp, mail, copy, anything, which is immediately can happen. But the goods transfer, it won't happen immediately. It has to be on real-time mode only. Okay. Once the respective person delivers the goods, immediately he will rise saying that I have received your goods. That means what, sir? Your stock debited. You are receiving your goods means your stock increases. That means your stock is debited. So whom you need to credit? vendor send your invoice? Still not yet. So during that time, you will keep your values in an intermediary account. So your vendor is liability or asset? He is a liable person. Okay. So you need to pay to him. So your GRIR account, you will keep it as liability. Your liability nothing but what, sir? Credit or debit? Yes or no, sir? So it is going to be credit. So your asset you are debiting and you are crediting to your intermediary account. Okay. So now you are going to do debit stock credited to your intermediary account. Okay. Whatever the value, sir, let's take 50,000. Here also 50,000. Okay. Now later you have received your invoice from vendor. So once you received from your vendor, you know what is the actual value, what is the actual invoice value. So during that time, what you will do it? Credited to your vendor. So who is your debitor, sir?
Intermediate.
Intermediary account. 50. Okay. To do these two things, before doing these two things, you are having your purchase order. 50,000. Quantity is, let's take 10 quantity, simple example. 10 quantity, 5,000 per quantity. Forget about above steps, sir. This is different. So here, this is your first one, this is your second entry, and this is your third entry. So these three only we are going to say it as. You might have used here about end user point of view. Three-way matching, two-way matchings. This is what it is. Purchase order, GR, IR, three-way matching. Two-way matching. Two-way matching. Two-way matching. Your two-way matching between your PO GR or PO to IR or IR to GR. Your three-way matching means PO GR IR. Clear, sir? This is your end user point of view. They may ask questions. Clear, sir? This one. Sir, anybody having doubt on these two concepts, sir? General entries. Sir, all these are basic your fundamentals of accounting. Okay, not SAP point of view. General normal concepts are book concept. For book concept, I'm adding little bit into SAP or system functionality. Yes, sir. Anybody having any doubt on these two entries? If not, then I will go to the next thing. Yes, sir. Lakshman, KK, Hussein.
Clear, sir.
Clear, sir.
Yes, sir.
So now I'm going to take let's take material. I'm going to take material code. I'm going to take same example. Gold is your material. I'm going to take price control. Yes. This is your price control. This is your material code. So now you know it. What is material code means? Your master data. Price control S means standard or whatever we have discussed as fixed. Okay. So gold fixed price. That is, I am taking 5,000. Okay. This is the example I am taking. Now I am going to take case 1. PO, your purchase order. So you are planning to take 10 quantities. Okay. And PO, let me give vendor. Vendor is GRT. Okay. Quantity and quantity. Okay. Price 5,500. Let's take today. So your total value is, and sir, this is your purchase order. Clear, sir? Now you are going to do goods receipt. Yeah. Now you are going to do goods receipt. At the time of goods receipt, what is the accounting entry? As I said, debited to your stock. Okay, credited to your intermediary account in bracket GRIR. Okay. Intermediary account only we are going to say it as GRIR account. Between your goods receipt and invoice receipt, it is working as a mediator. That is the meaning of GRIR. It is a intermediary account between your GR and IR, goods receipt and IR, invoice receipt. So simply we can say GRIR account. Okay. So what is your stock value, sir, here? What is your stock value here? So your stock value will follow based on this price control. Your stock valuation always follows your price control, whether you are having fixed or variable. Okay, in this case, it is what, sir? Fixed. So your stock valuation is going to be happen based on what, sir?
50,000.
And quantity into 5,000 or 5,500?
5,000.
5,000. Remember, sir, you are following stock valuation based on price control, and your price control is S means fixed price. Whatever you are having fixed price, it will follow. It won't follow your market price. Market price, we will see next example. So 50,000. But what is your liability value?
55,000.
10 into liability value is what, sir?
5,500.
5,500. This is your liability value. So here, your debit and credit matches? No. Why it is not matching? Reason?
Standard price and
Different in
market
what,
price
sir?
difference.
Price. So, debited to price difference. Clear, sir, entry? Anybody having any doubt? Online, sir, clear? Yes, sir, online, please.
Yes, sir.
Clear? Clear, sir? Anybody having any doubt on this one? If no, then I will go to the Okay. So here, clear as the color marks. Okay. So here, okay na? ఇది నాట్ క్లియర్ గా ఉంది సిస్టమ్ లో. ఓకే, ప్రాజెక్ట్ లో తేడా వస్తుందా? కలర్ లో తీసుకుంటున్నాం. ఏం లేదు సార్, ఆన్లైన్ లో ఉండే వాళ్ళకి ఓకే ఇలానే ఓకే ఓకే సార్, ఫైన్, నో ఇష్యూస్. సో నౌ here you are going to have with price control is V, which means variable price. Let's maintain 5,000 only rate, no issues. Okay. Now this is your PO, no changes, sir. So based on this, what is going to be our accounting entry? Yes, sir. What is your stock value here?
55,000.
So as I said, if you are having variable price, it won't take this price, sir. It will take your market price. Market price means your purchase price. Your purchase price is your market price. So it won't take your standard price or fixed price. It ignores this one. It will consider always your market price, your purchase price. కొనేటువంటి ప్రైస్ ని మనం మార్కెట్ ప్రైస్ అంటాం. So here we'll have it. So do you get this price difference now?
No, sir.
Difference clear, sir? If you are going with purchase price, how it will be? If you are going with market price, how it is going to be? Clear, sir? Any doubt online, please, sir?
Clear,
Online
sir.
clear, sir?
Sir.
Yes, sir.
Yeah, okay. Now you have received your goods receipt. Now you are going to get your invoice receipt. Okay. Now you are going to get your invoice receipt. Okay. So first we will see at fixed side. Next we will see at V side. Okay. See, fixed side. Invoice receipt. So once you are receiving your invoice means debit intermediary account. Debit your intermediate account. What was the value here, sir? Will update same, sir. Whatever your intermediate account value is there, same value will get updated at the time of IR. It never be changed. It never be changed. Always your intermediary account balances should be equal. Whatever you are having in GR, same value will be in IR also. No changes at all. Whether your vendor price, whether it is differed from your invoice also, this price won't change. If you invoice credited to your vendor, so your vendor value, whether it is 50,000 or whether it is 45,000 or whether it is 55,000 or whether it is 60,000, anything, any value, your GRIR value is going to be the same. No changes at all. Okay. So as a first example, assume your vendor value also came as 55,000 only. Okay. No changes in it. Clear, sir? This is the your invoice will get created. Same way, No changes. Clear, sir, concept. Yes, sir. Online clear, sir. This is your basic scenario, sir. With V and with S. Okay. So here, how many GL accounts you are getting it, sir? In this case, how many GL accounts is required? Stock, intermediary GRIR one account, and price difference, 3 accounts. If you are going this way. And your vendor will have your vendor account. Within the vendor, you will have your recon account. Okay. In this case, total how many GL accounts is required, sir? Totally 4. Here, if you are going this method, how many is required? 3. So these GL accounts, it need to become automatically, sir. These entries automatically will get generated. You are not going to give manually, like you are doing it FB60 or FB02, FB50 or FB02 or whatever it is, where you are giving manually the GL accounts. Here, all these things will happen automatically by system. If it is happening automatically by system, means what you need to do in system? You need to do somewhere the configuration, like we have done, right? Advance payments or advance receipts. What you have done through your special GL indicator, you have mapped your GL accounts. That means that is your background configuration. From there, it is fetching automatically the gain or loss accounts in your FCR. It is coming from your background automatically. Same way here also, you need to do configure in background. Then the GL accounts will fetch automatically. So where we are going to our GL accounts means that is your OBYC configuration. This is your FIMM integration. TCO. Here you will do map your GL accounts. So how are we going to map? What is the funda? What is the concept? What and all the things we need to keep in mind? Everything we will discuss slowly. The basic, what we are doing it. So what and all the GL accounts might be required for these GL accounts where we are doing your integration. All these GL accounts are your automatic determination. It will derive automatically. Based on it, it's up to you. So if you select post automatically checkbox means what, sir? Your post automatically checkbox controls the business users should not post the entries manually. If you not selected, business users can do post the entries manually. That is the thing. Whether you are selecting or not, it won't be an issue. Post automatically checkbox usage is to control business users to enter the data manually. If you are selecting or not selecting also, automatic postings will happen. The checkbox is controlling of business users not to post manually. Clear, sir? Sir, the basic. Anybody having any doubt? Yes, sir, please. Yes, sir. If you are clear, then we will take 25 minutes break, sir. 10:25 will be back, sir. Okay. Then 10:30 to 11:30, 12:30 it will go. So I will try to cover different scenarios. Everything I will put down in Excel. Later, if you want, you can write down. Based on all these scenarios, we will do our FIMM integration. Okay. Yes, sir. Anybody having any doubt? Yes, sir. Okay. If no doubts, then we will connect at 10:25, sir. Thank you, sir.